Fashion e-commerce MyTheresa is catching up as a major fashion e-tailer. Costco proves not only to be a COVID survivor but a strong stock market contender. And South Korean's Coupang goes for IPO but not without some unfortunate news. All this and more on this week's Invest Roundup. Happy Hump Day, folks! It's your boy Terry and you're watching Invest Roundup. Last week was sensational to say the least. Not in a good way, sadly. Microsoft faces a global cybersecurity crisis when they were hacked and more than 60,000 customers around the world have now been infected, mostly small and medium-sized businesses. Oprah interviews Meghan Markle and Prince Harry to discuss things that happened behind closed doors before their exit. And we gotta say, it really isn't easy having the entire country stare at you and your family 24/7. You get public attention, you get public attention, everybody in this family gets public attention. Let's get into this week's news. Disclaimer: whatever stock or news we talk about is not a recommendation to buy or to sell. These are all just news we deem important, things we believe you need to know if you're invested in the stock market or if you intend to invest. First news item, we talk about a hidden stock market gem, MyTheresa. As we have the International Women's Day this week, ladies, this is for you. Luxury brand e-commerce MyTheresa might just be the best fashion stock to invest right now, and we'll tell you the many reasons why in just a minute. First, a little background. Listed on a New York Stock Exchange late January at $26 per share, MyTheresa is a Munich-based luxury e-commerce site which helps high-net-worth shoppers to find their next designer handbag, shoes and clothing from 200 big global names. Christian Louboutin, Valentino and Max Mara, for instance. Their most loyal shoppers get access to personal shoppers, styling services and exclusive invitations to designer parties. They have influencers host their digital events and they collaborate with designers to come up with exclusive collections which would only be available on MyTheresa. In fact, they just recently launched an exclusive wedding capsule collection with high fashion designer Simone Rocha. But here's the odd thing. Despite all this big money coming into the company, over at the stock market, MyTheresa doesn't seem to be garnering the attention it deserves yet. Barron's even said the MyTheresa stock might be the cheapest thing it sells at the moment. Let's look at the facts. Fact: the overall luxury market is growing by about 7% annually. Fact number 2. MyTheresa is at the exact intersection of luxury and e-commerce, the two biggest growth trends in retail for now. Fact number 3. Online sales of luxury goods have increased in 2020 as the pandemic drove wealthy shoppers to the web. Fact number 4. The net income has more than doubled from 6.3 million euros to 15.7 million euros in the last year. Honestly, if you ask me, it's just a matter of time before major fund houses or Reddit discover them. The company is now planning to expand to US and China to reach its coveted consumer base. They will, however, have to go up against Farfetch, a competitor much bigger and more well-known as well as Richmond, the company that owns Net-a-Porter. Another David versus Goliath tale. Regardless, the company is thought to be undervalued at the moment with an intrinsic value of $33.01 while their share price is only at $27.19. Second news item, Costco releases their financial results and it is looking good. Retail giant Costco reported its earnings last week and you know what? It's really starting to look like a good investment. Famous for its giant warehouses overflowing with almost everything and anything, the chain is certainly accelerating its earnings and revenue growth fast during the pandemic. Since the pandemic started, shoppers have been spending more on food, appliances and home goods, and all these are all done online, which boosts Costco's e-commerce sales. And by the end of last month, net sales have increased 15.2%, and compared to last year's sales in the same period, it has increased 13.8%. One little glitch, sadly. Their per share earnings did not meet analysts' expectations due to rising costs and caused some investors who decided to sell off at this news. The stock, which was already tumbling since middle of February, tumbled even further. It's now lost 12% and also the second major retailer to lose investor interest after missing analyst projections, despite being a big winner in COVID-19 crisis. First one being Walmart. Apparently, investors are worried that the vaccination program will cause their financial results to slide back to its pre-pandemic self. Anyway, the management of Costco remains positive, and they should be, stating that the membership has been increasing at a steady 8% and the retention rate is over 90%. And like their competitors Walmart and Target, Costco has also been testing new things to grow their business, including curbside pickups in Albuquerque, New Mexico. At the moment, Costco is checking all the boxes to be a great investment with steady growth, dividend yield and health. And they're also considered a low-risk investment. Well, if you learned anything in the last two news we've shared, it's that financial results and share prices are separate entities. If you see a company's share price sliding despite having good financial results, never be afraid to pick it up and go against the herd. Not everyone recognizes the value of an unpolished gem. Do you know what else some people don't see the value of? our weekly stock market updates. We'll be bringing you the latest news and happenings during this crazy market correction, so don't forget to subscribe. Now, let's get back to our last news item. And finally, here comes one of the biggest IPOs in history, but also something sinister is afoot. Riding on the IPO craze that's been going on since last year, Coupang, also known as South Korea's Amazon, is going for IPO. The company has filed its prospectus in the US and is expected to raise up to $3.6 billion, which would make it the second largest IPO on the US market since Alibaba, even beating Amazon. If this goes through, the founder Bom Suk Kim could be worth $4 billion or more, and it will be the largest listing by a Korean company in a decade. Founded in 2010, Coupang has grown to become one of the 3 largest private sector employers in South Korea. The online shopping portal initially started as a marketplace for merchants to grow and compete, but now has more than 100 fulfillment and logistics centers in over 30 cities. Among their cornerstone investors are Sequoia Capital, BlackRock and SoftBank Vision Fund, which currently holds a 39.4% stake in the company. Unfortunately, Coupang is still unable to turn a profit up until today, even though it had net revenues of nearly $12 billion in 2020. And it doesn't stop there. In an even more unfortunate turn of events, early this week, news were released by Financial Times that the company is now facing police inquiries over a series of injuries and deaths among its workers. According to sources, 8 Coupang employees have died over the past year as a result of overwork, including 2 who just passed over the weekend. Warehouse employees have also revealed they are usually subjected to public shaming if they fall behind rising hourly targets, which undoubtedly cause bad rep to the company's work policies. Analysts say that even though this is unlikely to dampen investor enthusiasm for the IPO, it will certainly raise questions about the sustainability of their growth. So those are the 3 important investment news we had to share with you this week. Once again, we encourage you to get more information if you'd like to act on any of the companies we've shared about earlier. Comment below and tell us what you'd like to see on next Invest Roundup, and share this video with your friends, especially those who are vested in the stock market. We'll see you next week.